Now, we've got our first panel of the Consumer Forum conference, and so tough act to follow, certainly, Shani, but I would like to welcome to the stage Katie Alpin, who is the Head of Strategic Insight at Which, and Peter McClenaghan, Peter, there you are, who's doing round two. Peter is Director of Infrastructure and Sustainability at the Consumer Council in Northern Ireland. And we've got Leo Miles joining us, who's Financial Services Policy Manager at Macmillan Cancer Support, and Conor Darcy as well, who's Head of Research and Policy at the Money and Mental Health Policy Institute. So thank you all for joining us today.
Feel free to move a bit if you want to.
You all need to
I feel like you're in the high risk.
health and safety, say you make sure you don't move that way, but certainly do move yourself out of the spotlight if you need to. So we are going to start digging deeper into the impact of economic, technological and societal events on consumer vulnerability throughout this session. We're going to hear from each of our panellists, and I might interject with a question or two as well before we open up to the whole room. But do start adding your questions via Slido, and we'll be coming round with a mic as well, so you can use that too. But we're going to be kicked off by Katie, who's going to get us started with some of the big trends and insights about consumers and the economy that's been uncovered via Which Research. So Katie, go ahead.
Thank you, Nikki.
Do you want to come and stand here?
I'm going to sit if that's okay. I've not got slides. I've got a mic on. No, okay. So I'm just talking.
Excellent.
Radical.
Excellent.
Can you all hear me at the back all right? Good, thank you. So good morning, everyone. It's brilliant to be here today. What a joy to see you all in person, even if I'm a bit intimidated, to be honest, having to follow Shani. Very difficult act to follow indeed. So as it's been said, I'm here today from Which is the UK's consumer champion, and we are here to fight to make life simpler, fairer and safer for every consumer across the UK. And I've got to say, my work at the moment is a little bit hard. There is a lot of work to do, as many of you doubtless know. I'm sure that's the reason why so many of you are here today. So I've been asked to give a kind of an overview of the changing sources and drivers of vulnerability across the UK population that I know my very able colleagues will then drill into some depth about particular communities and what different groups are experiencing. So like Shani, the first place I turn to as a researcher when I want to know about what's going on for UK consumers is the FCA's Financial Lives Survey. It is a brilliant resource. And I think it shocked many people when the survey first came out in 2017 and found that 51% of UK adults demonstrated at least one characteristic of potential vulnerability. Half. I think that when we reflect on the richness and the challenges of our own lives and our families, then actually that figure kind of makes intuitive sense, right? I don't know about you, but life for me and for my family is tricky and complicated and sometimes challenging. And that is just the richness of humanity, really. So when we think about it, we all find stories that we personally recognise when we look at the data about the times people find it tricky to, in this case, interact with financial services providers. You know, people falling into debt after a relationship breaks down because their income has drastically changed. People who struggle with reading or writing or numbers, who find those conversations with financial services providers or other people just overwhelming and avoid them as much as they can. And people who just simply struggle to find a way to talk to their bank or their insurer when they need to get in touch with them. And of course, this is the best data we have from financial services, thanks to the FCA for the brilliant data set. But the story is the same across sectors, right? It doesn't matter where we are, we're all human. Life is tricky and it's complicated. And all that big, shocking stat really shows us is that rather than trying to design systems for your hypothetical Homo economicus, we need to be thinking about human beings. And because the challenges that consumers face are complex, the trends of vulnerability over time are complicated as well. And so beneath those headline statistics sit changing economic and social trends that change the nature of the vulnerabilities that we have to deal with at any point. And this is where your jobs get really complicated. This is not something that you can do once and be done with, I'm afraid. It's going to be a continuing conversation. So Shani gave us some of those headline figures from Financial Lives about what we saw during COVID. And I'm going to try and fill in a little bit about what we think has happened since. Digitalisation is obviously one important trend. And in many cases, that's been a really positive journey for people through COVID. Certainly, if my 80-year-old father-in-law is anything to go by, we are still Zooming any weekend that we don't see them in person because he loves it. His use of emojis in text messages is a constant source of delight. Sadly, my husband is less enthused about the new eBay obsession, which means he's been given a bargain tie most weeks as well. But while the trend towards digital inclusion is generally really positive, we know that there are still people who are being left behind. Just one experience that we've done lots of work on at Which recently is about people who prefer to use cash, whether that's because they don't have the right device to do digital banking, because they don't trust digital payments, or just because it's sometimes easier to keep track of your money when you can see it. Which researchers found that a quarter of free-to-use cash machines have vanished in the 4 years since 2018, and that almost half of the UK's bank branches have closed in the last 7 years. Recently, that included the last bank branch on the Isles of Scilly, which means that customers there now face a ferry and an overnight stay in order to visit a bank branch at a cost of hundreds of pounds because a return ferry ticket is 140 quid. The story of financial resilience over COVID has been even more complicated. So while the FCA data showed that in early 2020, the number of people who had low financial resilience had actually gone down, because at that point incomes were doing nicely, the job market was looking good, we then saw a drastic rise in low financial resilience from 20% of adults to 27% by October of 2020. And sadly, we know that picture's getting worse at the moment. We haven't got the new Financial Lives figures yet, but at Which we run a monthly survey exploring consumer confidence and financial resilience, and frankly, the results at the moment are deeply concerning and distressing in what they tell us. Last month, we found that 6 in 10 consumers told us they were having to make adjustments, like cutting back on essentials, dipping into their savings, or borrowing money just to pay for the essentials of day-to-day life. And that number has risen every single month since the start of this year. It's up from 35% a year ago. And most worryingly, that data is for April. It was collected in the middle of the month, which was before most people will have had the first energy bill post the rise in the cap. So I'm expecting that the May results, when I get them, will be significantly worse. And what that doesn't tell us is the story sitting behind those human statistics. So at Which we get a sense of what that really feels like for people through doing qualitative research. And for me, it was really brought home with an interview I did with a lady called Paula back in February of this year. I was just chatting to Paula about her life, how things were going, so I can see how her life changes over time. And she did this interview sitting on a sofa, cuddling a hot water bottle, wearing 2 jumpers and underneath 2 blankets, because it was February and she couldn't afford to turn the heating on. And again, we know that situation has only got worse. Paula's bill is only going in one direction, and it's not the right way. Sadly, we're going to hear more and more stories like that in the months ahead, because the nature of the cost of living crisis that we are going through pulls us towards a kind of physical hardship that never went away, but we haven't seen at a scale in this country for a long time, and we haven't got the resources in place to deal with. I guess another thing to note is that lady was sitting with her heating off, cuddling a hot water bottle, because people will put up and do incredible things in order to pay their bills. Because the pride in that, right? In supporting your family and being a person who does what they're meant to do. And so, at Which we are seeing a gradual upward trend in our data in the number of people who are missing payments. It's about 7.3% missed a payment in April, but we know that that lags our other adjustments measure. Serious financial difficulty is with us today, and we can't wait till people miss a bill payment before we offer help. So, with the average household facing a financial shock so far this year of more than £1,000 in energy costs alone, we know we're going to have to keep a very close eye on financial insecurity over the months ahead. And it's a challenge for all of us, right? Because this is driven by things about in the world that we cannot change. I do not doubt that if someone in this room had a magic wand that would generate world peace and sort out global supply chains, you'd be waving it. I really hope you'd be waving it. We can't deal with the fundamentals that are driving this, but that doesn't mean that we're powerless. And as the standards that were published today showed, there are an enormous number of things everyone in this room can do to improve the honestly pretty dire situation that consumers are facing at the moment. And I look forward to hearing more of your ideas as we continue this conversation today. Thank you.
Yes. Thank you, Katie, for emphasising the grim reality that that's facing us. Just a very quick one before we move on to Peter. Some really interesting examples there of the big picture data and the real life experiences. And I suppose we talked earlier in relation to the standard about the importance of using data to help develop solutions. And I guess just from Which's experience, where do you see the opportunities from using the type of data that you're generating to show really what people are experiencing and how their behaviours are changing to support businesses developing solutions that can better support vulnerable consumers?
Oh, enormous opportunities, right? I mean, you've got to understand a problem before you can fix it. But actually, to me, I would say this, I'm a researcher and an economist, so I'm afraid I'm like double jeopardy in terms of data. We need to be looking at this from all angles. So what you need is both trend data that tells you what the big picture is looking at and what those threats are that are coming on the horizon. But critically, that's not enough. That's why I've started introducing more qualitative research into what my team does at Which, because we have to understand what that looks and feels like for people. We have to understand the things they're thinking about when they're making decisions and how they're responding. And, we haven't faced a cost of living crisis on this scale for such a long time, but it will be very different to the decisions people were making in the 70s, the 80s, the early 90s when we last saw this kind of thing. So we need to listen and turn our ears on. I guess that's the thing I would really encourage everyone to do.
Great, thank you. And thank you very much. And we will, I'm sure, come back with more questions for Katie as well. I'm going to hand over to Peter now, who's going to talk to us more about cost of living crisis in relation to Northern Ireland's consumers, and we'll probably hear more about the application of the standard as well. So, Peter, over to you. And just a quick reminder, we're going to have to keep things moving through the presentation so we can get to the audience questions shortly.
Morning all again. In knowledge that we're running behind, I'll skip over the first introduction to the Consumer Council. Safe to say that we're the statutory body for Northern Ireland consumers, and we've also undertaken an awful lot of research in relation to cost of living and COVID in the last year. Northern Ireland consumer picture. Northern Ireland demographics are somewhat different from the rest of the UK. We have a more rural population. Unfortunately, we've a lower healthy life expectancy and higher levels of disability compared to the rest of the UK. We also tend to see Northern Ireland consumers' incomes are lower, and we have more dependency on social securities. And that's really worrying when it comes to what's happening at the minute. Household bills in Northern Ireland in relation to groceries have been rising faster than they have in the rest of the UK. And we also have a history of having higher spend on home heating. And that's really, really worrying when it comes to the energy price crisis. Northern Ireland energy market is very different from the UK market. 2/3 of our households still use home heating oil to heat their homes. When Russia invaded Ukraine, within a fortnight, our bills doubled, literally doubled within a fortnight. And prices actually peaked for 500 litres of heating oil delivered to your home at about £660, well over the 10-year average of about £240. So a really grim picture. And frankly, in relation to the energy price crisis, Northern Ireland is a canary in the coal mine for what's coming for the rest of the UK. Even those customers who are on gas don't have a price cap in the same way that you do through Ofgem. So we're seeing that dual fuel bills in Northern Ireland are around 15% higher than they are in England at present. Of course, that's building or exacerbating a number of other vulnerability areas in Northern Ireland. In relation to housing, we've seen a hugely significant rise in the number of people in temporary accommodation in the last 3 years. We've also seen a huge rise in the use of food banks, unfortunately, in Northern Ireland. Trussell Trust say that they've had a 66% rise in the number of people using their food banks in the last 3 years. We've touched on banking issues. Northern Ireland also has a higher dependence on cash than the UK average, less access to fee-free banking, for example, and our worry is that's pushing more and more consumers towards debt and towards illegal lending, which is underreported in Northern Ireland but is definitely prevalent. So in relation to addressing those issues, the Consumer Council has been working very hard on financial support in the short term. We've been pushing government very hard on that. We were instrumental in the development of a first fuel bank for Northern Ireland. We worked with a lot of the utility companies in Northern Ireland to get them to fund the fuel bank. What we then managed to do was leverage that funding, and government provided match funding tenfold for that. So we got a fuel bank up and running for last financial year. And that provided support to families in crisis, about 20,000 families in crisis in the last quarter of the last financial year. The worrying thing about that was, though we helped 20,000 people, the website that launched that scheme had 27,000 hits on the first day of operation. So our view is definitely that there needs to be more direct financial support for people in the short term. We also need to assess how we provide debt support for people in forbearance. The lessons from the FCA were really valuable throughout COVID. The ability to move very quickly and react to the scenarios that we were facing during COVID is a really important lesson. And I think it's really imperative that policymakers and regulators and industry take those lessons on board, and looking forward to October for England, when your prices will rise again, that support measures are in place in that regard. That shared responsibility also comes in relation to regulation, and we had questions about that earlier. And as Katie's just said, in relation to connected data, we've been working with the Department for Communities and the Department for Economy and the utility regulator back home to see what more can be done in sharing data between those organisations, between companies as well, in preparation for this winter, so that we're more aware of the people and the groups of people that are in vulnerable situations, so that help can be provided to them as quickly as possible once we get a new executive in place after the elections today. Planning for the future as well. We've talked a little bit, touched on this morning, digital exclusion that's come to the fore as we've been locked in our houses in the last couple of years. And also in relation to decarbonisation. I was chatting to Stu from the Energy Savings Trust earlier, and it's very clear in our research that consumers are telling us that they really need leadership in relation to the decarbonisation agenda, but they also need financial support. And our worry is that the energy price crisis at the moment and the potential erosion of trust in the utility sector as a result could really damage our goal of decarbonisation. That's all from me for now. Thank you.
Thank you very much. I guess just picking up on that last point about decarbonisation, obviously consumers play a really important role in that transition to a green economy. And already we were seeing big barriers in terms of affordability of renewable or low carbon technologies. So, is that trend being emphasised even further, or are you seeing more engagement from consumers who are looking for more efficient ways of using energy in Northern Ireland?
I think the trend is being accentuated. Our research shows that people were really worried about the costs of decarbonisation even before the energy price crisis. I think that certainly in Northern Ireland, we're maybe behind the times in relation to encouraging people to decarbonise, but our research is definitely showing that people are just simply saying they don't have enough knowledge, they don't have the support to get themselves in a place to consider new technologies, and certainly the price crisis means that people's ability to afford that will be lessened, but also the trust factor is a major one. If people are going to move to using new technologies to heat their homes, for example, they absolutely need to be able to trust the providers that are giving them that advice. And a big fear for ourselves about the energy price crisis would be that an erosion of trust in the utility sector could really damage that potential to encourage consumers in relation to decarbonisation.
Okay, thank you, Peter. Great, so we're now going to move with the panel to focus on discussion on specific conditions that might leave people at greater risk of vulnerability. And we're going to start with Leo, and many of you in the room might have seen the press coverage last week of Macmillan's latest research showing the awful impact of the cost of living crisis having on cancer patients. So I'm sure you're going to tell us more about that, Leo, so I'm going to hand over to you now. Are you coming up here?
Yeah, I think that's going to be easier, if that's okay.
Go.
I can't guarantee that I'm going to manage the technology because I'm a bit of a
green
disaster.
button.
Green button that
Green
says
button.
next. This is fantastic. Do I? Oh, yes, because that's Peter's. Gosh, okay. So I'm aware that we're short of time, and one of the wonderful things is that I was chatting to Katie about earlier on is that as colleagues working in the same sector, I think we're all starting to say the same thing. So Shani was indeed a hard act to follow, and actually I think a lot of what I'm going to say is going to sound very similar, which is extremely sad, but also positive in some ways that we're actually having this conversation now. I think intersectionality 100%, Shani, is absolutely the way that we should be going, but obviously my role is to do a deep dive into the impact that we're seeing now on people living with cancer. So there are some differences, and I think I might be challenging a few things as well that we've already heard. Now, I'm sure that most people know that Macmillan is the largest cancer support charity in the UK. And fundamentally, we are here to do whatever it takes to make sure that people living with cancer get the support that they need. So that's exactly where we sit. I'm the Financial Services Policy Manager, and one of the questions I get asked most often is why? Why does Macmillan do that? Why are you involved? Now, there are currently 3 million people living with cancer in the UK, and that number is going to rise to 4 million in 2030. And 1 in 2 of us will be diagnosed with cancer at some point in our lifetimes. And I know that many people in this room, that means, will have a direct cancer experience. And I think that also means that people understand the physical and emotional impact of cancer. But what is less well known, is that there's a massive financial impact of cancer as well. So I wanted to talk about why people living with cancer are potentially vulnerable consumers, because I think it's obvious that people will struggle to engage with providers when they have limited bandwidth because of that emotional and physical impact of their cancer when they're going through treatment and all of those impacts. As I said, the financial impact is really, really significant. It's really sudden, it's really severe, and most people are completely unprepared for it. The knowledge about what this looks like in practice is really, really low. So I'm not going to go through in detail. This is a lot of statistic research, but I think this is our most recent research. This is from 2019-20, so it immediately went out of date when the pandemic struck in 2020. Sorry, I've lost it. The years have just flown by. So I'm losing track. But fundamentally, we see that this really, really big headline figure is that 83% of people with cancer experience a financial impact of £891 per calendar month on top of their usual expenditure. And that is due to increased costs. So all the things, again, some of the things that Shani's talked about, really, really surprising extra costs that people have, and the decreased income that comes from not being able to work, sometimes for protracted periods of time. For the 1 in 3 who are severely financially impacted, that is people under 50 in work at the time of diagnosis, with a mortgage, with dependents. That rises to an average of £1,038 per calendar month. So we see an increase in day-to-day living costs, £389 on average, and energy costs are one of those key components. This is very, very specific to people living with cancer, because when you are undergoing chemotherapy, it makes you very cold. people don't have a choice other than to use more energy in order to stay well. And I'm going to mention that again in a minute. So this is what, as we see going into the cost of living crisis, one of the scariest things. Now, what this does is this puts issues of people living with cancer squarely with service providers in terms of potentially being part of the solution. There are things that can be done. But the continuous theme, which you'll see a bit more as I talk, is that there is A, a toxic combination of health and financial impacts, and B, that is exacerbated when providers fail to respond in a flexible and fair and supportive way. So we are talking, where Macmillan's work started on this actually was with our financial guidance service, which is a very, very specialist service that provides help with things like mortgages, insurance, pensions, credit. And what we were actually seeing, and it's why I'm the financial services policy manager in the first place, was that people were asking for something very basic or felt very basic, and that was actually forbearance on their mortgages, just for that temporary period to get them through treatment. And obviously what we got, unfortunately at that time, this is a decade ago, was computer says, no, we can't do anything, come back when you're already in default. Exactly the response that you really didn't want to see, absolutely. That tipping point where someone could spiral out into financial difficulty or were already going to default and they're ruining their financial futures as a result. Basically, the other problem of that was that people didn't recognise service providers as a source of support. So you get this vicious circle as well, when if you go to them for support and you don't get it, you tell your friends that you didn't get it. It continues, so people don't recognise providers as a source of support. Now, obviously, the FCA's vulnerability guidance and the FCA's work on vulnerability has been amazing. But again, as Shani said, unfortunately, the pandemic has set that progress right back. And the story of the pandemic for people living with cancer is one of exclusion, unfortunately. Again, this really toxic combination of the health impact combined with the financial impact. Because the cancer system, health system, had to be completely realigned around what was needed to redeploy people to the front line and to respond to the health impact of COVID, people saw treatment cancelled or postponed. They were clinically extremely vulnerable, so they were shielding. And the reason we talk about the forgotten C is because that's exactly what people felt they were, totally forgotten. They were worried, they were stressed, they were anxious, they weren't having their checkups, they didn't know what the future might hold. And unfortunately, although the cancer system is now getting back online, because of those disruptions, we are afraid that we are going to be seeing people, and we are seeing people diagnosed at a much later stage with more advanced cancers. So I'm sad that it's a very, very bleak picture where things are only going to get worse in terms of health impacts. And this, for me, is really interesting. And I see Richard's left, but I didn't want to make him sad. And Rishi's not here to talk to either, Shani, sadly. But those universal design schemes didn't work for a lot of people with cancer. So people did need support because many of them were unable to work due to shielding. But that was a very confusing system for employers who were trying to deal with people who were unwell. So sometimes they just put people onto sick pay or made them redundant. And sometimes they were just very confused about how furlough should apply. So a lot of people ended up on a much lower replacement income than people who were able to access furlough pay. As consumers, again, those lovely measures that Richard talked about, were put in place, but people really struggled to access them. So the first thing was, the whole message here was that people with cancer were at the back of the queue. You can't sit on a phone for hours waiting to get through to someone, and that went across all the service providers, when you've got brain fog, when you're already fatigued, when you're cold, when you're tired. The actual process of accessing those measures was really difficult for people, and they just went to the back of the queue. The same applied for the welfare system. People applying as they were diagnosed for personal independence payment. The lines were overwhelmed with people applying for universal credit for the first time. So another system that didn't work for people living with cancer. And you've got this lady, Paula, here. What was the worst thing was the expectation was that there was help available for everyone. And of course, it wasn't available to people with cancer. This lady phoned her bank and they said no. You can see, she said, I was shocked. It was scary. I had to find money from friends. She didn't get that support. And it really isn't that clear why. However, we have seen on our financial guidance service people who specifically said they were declined because they had the wrong C. I'm sorry, you've got cancer, not COVID, so you're not actually eligible for that support. And to go back to that point about universal design, there were some actually interesting things that came out of this, because people did appreciate being able to apply online, because one of the real challenges of talking to service providers is the stigma, not wanting to disclose your cancer diagnosis and being afraid that if you do, it might get worse. So people were like, great, digital journey, I don't have to talk to someone. The problem with that is that one of the things that Macmillan does is ensure that people get the right type of financial support at the right time in their journey. That universally designed scheme may not have been right for them, and we're now worried that people who took those measures have run out of road. There's nothing else for them, and it may not have been the right time in their journey. So again, we have this really, really overarching message of measures that aren't tailored for people who had the wrong scheme. Sorry. I'm being told to run on. Oops, okay. So very quickly, moving on to the forgotten C on the cost of living. I'm afraid, again, it's just a bleak picture that's getting worse. So Macmillan has a lot of data. We spend a lot of time monitoring what's happening to people, both through data but also through our services. Really pleased to hear Nikki mention the media attention that we've had. We are delighted with that because we need to get this message out. 1 in 4 people living with cancer in the UK, 750,000 people say they can't afford life at the moment. They are barely subsisting. Again, they are struggling to access welfare. There's currently a 22-week wait for personal independence payments to be paid. And the problem is that fundamentally, this cost of living crisis is a triple whammy for people who live with cancer. They are still recovering from the long tail of financial impact of COVID. The key costs of living are the things that people need to stay well. So people, are needing to keep hygiene, good hygiene practice. If they've had surgery, as I said, they need to stay warm. If they're having chemo, they need to eat a good quality diet. And things like this lady, Ruth, is talking about her phone bill, but also her petrol means that she can't travel to treatment safely, and also she's socially isolated. So it really is bleak. Our services are seeing an enormous uptake, enormous uplift in the number of people we're supporting. From January to the end of March, we supported 10,000 people. 7,000 of those people were looking for support with energy costs. And that was a 58% increase on our last year's forecast. So this is absolutely huge. Macmillan is doing whatever it takes. We've released an extra £3.5 million of funding into our grants programme. But again, we are looking at measures that are universal. We don't know if the government measures are actually going to be right for people who live with cancer or whether they're going to be enough. They're not targeted enough and they're not specific enough. So we are already seeing people spending hours, again, trying to get through to understaffed vulnerability teams at service providers. People who've had their heads in the sand just aren't getting the support that they need. We can only see a worsening picture. Our services are really at capacity, and unfortunately a lot of their time is taken up now with safeguarding cases. So it is a really, really, really worrying picture. I'm sorry to be so bleak, but it is really, there is, as Katie talked about, there's not a lot that we can do to deal with those macro things. But the good news is we actually have experience of what good looks like in practice. Now, I'm going to really skip through the slide partly because Sadie is giving me the evil eye. But Macmillan, over the last 10 years, in response to those very initial things about the struggle of people trying to access mortgage forbearance, have worked with a number of service providers and financial services bodies and organisations in order to do a lot of pilot work around providing specialised support that meets people with cancer's needs. So it's a very, very busy slide. Referrals into Macmillan have been an absolutely critical component of that because we're the experts. But what good looks like is organisations on the other side, the consumer organisations meeting us where our expertise ends and where theirs begins and vice versa. So it is that absolute partnership that gets the best outcomes for people with cancer. We want to see that consistently, which is why the standard is so important, because that is what will lead to people getting the right outcomes for them. And just very quickly, our Empower partnership, the legacy of that is our energy advice team, who are specialist advisors. That means that people can have support regardless of who they draw their services from, which is really exciting. I'd love to talk to anybody who's interested later on, but we are working with Virgin Money at the moment, and we have a very exciting pilot that has just finished which are the Virgin Money Macmillan guides. And these are staff members who are volunteers who can basically provide emotional support to people and direct them to all the sorts of support that are available to them, both at Virgin and more widely. It's a very interesting and very unusual role, and it demonstrates the kind of innovation that we really want to see to help people with the issues that they're facing. And I'm going to stop there. Sorry. Thank you.
Thank you, Leo. Thank you. We knew that this panel was going to be quite a heavy panel in terms of painting a very grim reality. And I'm glad that you did come on to a, reason to be optimistic. My go-to podcast after the Standards Show podcast, obviously, is Reasons to be Cheerful with Ed Miliband and Jeff Lloyd. And they ask all of their guests what the reasons for optimism are. And I might come back to each of you later to ask about that. But first of all, we're going to finish off with Conor telling us more about the links between mental well-being and financial health as well. And you'll want that as well, presumably. Yeah, thank you.
Thank you very much. Apologies if I start speaking into this halfway through. So, money and mental health, they're two topics that are pretty intricately connected. And I think for lots of us, we probably understand how our financial position affects our mental health. Anyone who's worried about how they were going to make a payment or what was going to happen if, when their bank got in touch, will understand what kind of toll that can take in terms of stress, in terms of anxiety and concerns. So I think that's a really big part of this cycle that we talk about a lot. So how your financial difficulty can play into that picture of affecting your mental health, which over time can start to become a mental health problem. But I think it's the other half of this chart, which hopefully people at the back can see, that is sort of less known, but is just as important. It's where when you already have a mental health problem, when that's established, how that can lead on to financial difficulty. And a lot of it is, similar things to what Leo was mentioning, things like the practical symptoms that you experience, like having difficulty concentrating, like having difficulty communicating, like having difficulty remembering to, get in touch or to make a payment. All of these things can just have that knock-on impact on your finances, where maybe a payment gets missed and there's a charge that goes in. Maybe you don't have the capacity basically to change from one supplier to another, so you keep paying very high rates. And it just, again, over time, this cycle can really lead to some worse outcomes for people at a time when they're really struggling. To, again, have some more worrying stats to really kind of emphasize this. And I think the point Shani was making earlier on as well, while I'll talk a little bit about the cost of living impact and how that has definitely made things worse, these are really long-standing issues where this vicious cycle has been an issue that's affecting, again, millions of us every year, which is such a big concern. So we're talking about 3 times people with mental health problems being 3 times as likely to be in problem debt as the rest of the population, more likely to have no savings to deal with an emergency, and more than twice as likely to have to rely on credit or borrowing to cover everyday essentials. So again, going back to some of those things that Richard was mentioning earlier on, in terms of the warning signs that people are looking for, I think these are some big flashing lights for us that, again, that this is an issue that really does need lots of attention from firms and others. And what we do at Money and Mental Health is we're, a research charity. We're not providing direct support to people, but we want to dig into what these issues are, how they play out, and how firms, how regulators, how government can take steps to start to break that cycle. And so much of our work is based on our research community, which is a group of about 4,000 people with either lived experience themselves of mental health problems or having cared for people with mental health problems. So much of what we talk about, all that cycle, is all based on real personal experience. And these are just a couple of quotes, again, not to, sorry to have a really negative picture on everything at the moment, but this is some work we did back in, I think, end of January, start of February, again, during the winter, when prices were starting to go up for lots of people. Maybe the full impact of the energy prices hadn't come through, as we've discussed, but again, food prices and lots of other things were already ticking up. And we just heard some really difficult stories about, firstly, again, on this cycle point, the impact that it has on your mental health when you're just dreading that next increase, when you know it's coming, when it's in the news every single day. This was also when lots of energy companies were folding, and just the uncertainty that brings was so tough for so many people. And in some polling that we did around this, about 90% of our research community respondents told us that they had been worried or anxious about companies folding and the price rising. So it was really tough. And then this second quote then on the impact. This person talking about having to not have the heating on as much, like Leo was mentioning, and Katie was mentioning, not showering as often, just things that are all the sorts of stuff that we just expect as a day-to-day right, and that everyone should be able to do. But the impact not being able to do those things has on your mental health. All the sorts of things that help keep us mentally healthy just become that much harder to justify to yourself to do, and that's where you end up cutting back. And again, this cycle just really continues where it can be tough to break out of it. So that's the negative picture. The more optimistic picture is that we often hear really positive things about when firms do things right, when they're dealing with customers experiencing both mental health problems and financial difficulties, that it can be really transformative and it can make a really big difference. As Richard mentioned earlier on, we do that directly, working with firms, taking them through our mental health accessible program, making sure that for a customer with a mental health problem that they can get the help that they need and that service works for them. And often we talk about these, again, it's there in the standards, which is great to see, this split between universal design, inclusive design, and getting it right for people who have has been flagged as having a vulnerability. And I think for that first half around universal design, it's really important. And I know, as Leo said, there's definitely a stigma around cancer. People can feel that's really hard to share. It's also really true for people with mental health problems where, the uncertainty of how someone's going to react, the uncertainty about what sort of change might happen in practice, but really that question of, would it also have a negative impact for me? People often tell us that they worry that if they disclose when they're, struggling, that they will never be able to get credit in the future. So I think really clear information about what will happen, making that disclosure journey as easy as possible is such a big part of it. But there's so much in the kind of previous stages, making that journey smoother for everyone, regardless of their mental health, would just be such a benefit. So it's things like multiple communication channels. Again, this has been one where with COVID, there's been a much bigger switch to call centers and to online services, which can work fantastically well for some people, especially if you're really struggling to get out of bed and do the basics. But for others who really value face-to-face services, being able to walk into a bank branch, as we know, that's all just become that much tougher recently. So making sure that however your customer wants to get in touch, they can do it in a way that suits them, that meets their needs, is going to make such a big difference. Supportive messaging, and not just when you're communicating with someone in debt, saying early on that we do have the support for anyone who you're speaking to, again, can make such a big difference when the point comes when someone needs to get help. And then on the more targeted support, as I said, the disclosure journey is really key, and having the training. Again, as was mentioned earlier, it can be a real tough burden for someone who doesn't know very much about mental health problems to be able to have these discussions. And I think when it comes to customer service staff and society more generally, there is definitely more awareness now of mental health. I think there's a more willingness to talk about it, but some of these practical differences of what they really mean for people and how small changes to things like, sending reminders when payments are due, offering people multiple ways to get in touch, and referring on to specialist organizations where that's appropriate can just make such a big difference. So giving the staff the ability and empowering them to be able to offer that support is a really, really big part of it too. So that's it for me.
Thank you. Thanks, Conor, and thanks for coming on to Reasons for Optimism there as well. And I suppose just to say, we are bringing you down this morning, but we are going to lift you back up this afternoon because we will be talking about some of those ideas in real practical application throughout the afternoon. So don't worry, we won't let you leave unless you're on a sort of more positive, let's move forward with this. No. If all else fails with the conference, we do have cocktails that we will just ply you with at the end of the session. So we are starting to cut into lunch, but we saw from the what you want to get out of today earlier that the number one is about networking. So we will make sure that you still have an hour for lunch, but I do want to give people in the room the opportunity to ask our wonderful panel some questions. So I'm just going to do that for the next 5 minutes. Any questions that we don't get to, please plug them into Slido and we will get to them whilst in terms of the reporting from the event. And I should say all the slides that you've seen there, because there's a lot of really fantastic information on there. Then we will be publishing those as well, obviously with consent from our panellists. So let's start with any questions from the room. I think we've got a mic moving around. Lovely, thank you. Any questions? We've brought them down too far.
They want lunch. They want lunch. That's what
We've hit an all-time low. We do have some Slido questions. Thank you very much. Oh, lovely.
Jaunty.
Okay. I'm sorry that you're not getting to see these. So, first question here from Johnny Timpson. Signposting customers in vulnerable circumstances is only a financial services regulatory requirement re-accessing travel insurance. Should this be expanded beyond financial services? Who would like to pick that up for me?
I can give it a go.
Leo, would you? Thank you. Thank you.
Partly because Johnny and I know each other well, and I work on the access to insurance and signposting area with him. I mean, I think it's yes. I suppose the short answer would probably be yes, but it's a bit of a double-edged sword. So signposting has to be done really well, and signposting is actually really challenging because you still have to match the signpost to the type of support that the person needs. Now, I suppose for Macmillan, it is kind of quite obvious because it's get people to us because we provide a full range of holistic services. But actually, it's as I say, it's important. It's not necessarily obvious where the need is, particularly if someone has intersectional characteristics. So, if you're going to do it, it's got to be done really, really well. At Macmillan, we favour referrals. We favour a warm transfer where people, are able to be handed over, so they don't have to continue to repeat themselves all the time, and that there's already knowledge about what their circumstances and how the receiving organisation can help them most effectively. But really, it's absolutely fundamental that people can get to the services that they need through as many routes as possible. So I will say, Johnny, yes, I think through other sectors, making that compulsory would be a good thing.
Wonderful, thank you. Any other questions from the floor before I move on? Yes, we've got one down here. Yeah.
Just in relation to signposting, it's really important that signposting is done well, as you said. We've seen some really bad examples of signposting recently where people are being handed over to other organisations and the other organisation doesn't know that person's coming. So it's absolutely essential that you have a relationship with whoever you're handing over people to.
Yeah. Thank you.
Just a follow-up on signposting. My biggest concern, I'm chair of a citizen advice bureau. We have one money advisor, one benefits advisor, and everybody wants to signpost to us. And particularly in relation to people with mental health problems, these problems can't be solved overnight.
Yeah.
So we're in danger of the money advisors and the benefits advisors developing mental health problems. So my plea is, how about putting some resources into these services to be able to take on the signposting? Yeah. And I know I'm deviating from my own CPIN, but I feel very strongly about it that there should be a recognition that these organisations need better funding.
Yeah, that is a very important question, and that pressure on resources. Leo, I know you will want to answer something about that, but Conor, can you come to that question as well?
Sure, yeah, that's something we hear all the time, and it doesn't work for the advisor where they are being, they're not therapists, they can't help people who are really struggling in this way, and it also doesn't work for the person who needs that support when someone is just trying to get through a backlog, is aware of how many other people who could potentially benefit. So more funding in that area and more training, I think, for staff, not to become therapists, but to understand this again is practically how you can help people out is such a really, really big deal. And I know the Money and Pension Service are doing more sort of training as part of the offer for people in England, but it's much more needs to be done. I completely agree.
Yeah. Leo, do you want to add anything to that in terms of relationship?
Well, I think there's loads of things, but fundamentally, I mean, it's the first thing is we have to get the key message that the signposter must have done everything within their remit and their power and within their responsibility first before handing someone over, or at least make sure someone's got a route back in if they think that going to another service first is the right thing to do. And there is that capacity issue, the kind of on-off pedal, where one of the reasons we prefer to work in partnership is for exactly that reason, where it's, we need to know what capacity we have. We can't let people down. So, I think the point that Conor raises is vital, but I do feel a bit at the moment, particularly with services so overwhelmed, there is a real challenge around this. I mean, that's, there's chronic underfunding, and that's the point for us, but generally. And again, this is where we look for innovation. And so the Virgin Money role that I talked about earlier, the point of that was to have someone who has the time, who's in the right place at the right time for someone to have the knowledge, that deeper knowledge about what support they might be able to provide. So that has worked really well, and it's because it's a volunteer role, people are incredibly passionate as well. So I think it's something there about looking at different ways to make sure that we're spreading the capacity, but also recognising that the emotional support role of the Virgin Money Guide is a light touch one, and it's an interesting deviation from the Financial Conduct Authority's vulnerability guidance, which kind of says, quite rightly, as Conor says, they're not trained experts. So it's not about providing in-depth emotional support, but it is giving what you can at that point before you then signpost people on.
Nikki, can I go in quickly on something practical there? Because I think there's, Leo just said, firms have to make sure they've done everything they can to support their customers first. And so one of the things that we're seeing at the moment is social tariffs in broadband. Most providers now have a social tariff for their broadband, but they're kind of secret. Don't tell them about them. Certainly don't make it easy to find on your website that you've got that. Maybe don't even tell someone they call you up and tell you they're on benefits that you offer that. I mean, what is the point, of offering that support if no one can see it? And so I think, actually for me, that's another demonstration of where we really need to be taking this conversation, financial services where, Conor and Leo and I end up having a lot of these conversations. We need to be having these conversations across the board because there is just more that businesses should be doing before they look to the charity sector for help.
Yeah, super, thank you. And we'll finish with the questions to the floor, but I just want to, while you're composing your question, just ask a quick question that we've had via Slido, which is really in relation to the acceleration of digitalisation. And I think Peter and Katie, I'll come to you with this. This is from Tony Allen. So more consumers are being forced to digitally onboard, particularly in financial services. So what more can the FCA and indeed organisations be doing to support digitally excluded? Katie, do you want to pick up that first? Because I know you started talking about a bit of that in your...
Simply to me, that there are many dimensions of digital exclusion. We need to make sure people have access to devices, if that's the barrier. There are brilliant organisations doing work on supporting people to become digitally included in terms of skills. But I think we also need to accept the fact that there are sometimes really good reasons why digital channels don't work for people. If you have a visual impairment, that means looking at a screen just doesn't work very well. Or you have some sort of concentration challenges, which mean working your way through really long forms doesn't work for you. And in those cases, we should, to me, always be thinking about the routes that work better for people. And that's going to mean protecting face-to-face access to things and other ways of doing stuff.
Thank you, Katie. Peter?
I think I'll leave that one with Katie, to be honest, if you don't mind. I do have my reason to be cheerful, though.
I would love to hear that.
And I think it feels like, and this is maybe not intentional, but it feels like the four of us have done a bit of company bashing. And in actual fact, I think there's been, from my work with regulated companies and as a consultant and working in companies and now working with companies in this role, that in actual fact, generally company culture is going a long way to make change, to be more attuned to consumer vulnerability. I think that's a really good thing. And I think in some ways, actually, some of our leading companies are ahead of the curve compared to even where government's at. So that's a real positive thing. And certainly the standard and implementing the standard in your company can really help with that culture change as well. So that's my positive.
And that is a really nice segue for this afternoon's discussion, because we definitely will come on to that. But I do want to leave it to the floor one more question, and then I promise I'll finish.
So it's more of an observation. I know we have to do as much as we can before we signpost or hand over, and my organisation does signpost and does hand off, but we always get consent, because in the past some patients have complained because we have to give details over when we hand over. and they say, why did you give those details to that person? We have to prove to them that they did give us consent sometimes. So getting consent before handing over and before signposting is the right thing to do.
It's important, absolutely. And we will probably come back to that, I think, later this afternoon. But for now, I'd just like to thank all of our panellists for your really incredible and disheartening contributions. So thank you very much.